Welcome to another S&P 500 analysis. Last Thursday, the S&P 500 had another wild day. It was down more than 1.6%, then it did a 180-degree reversal and ended the day with a 1.5% gain. Initially, it was down 110 points, then a 180-point reversal, and ended the day up 63 points. So was that a bottom, or was it just a short covering rally? We will look at the price action, the market sentiment, and the internals to see if it was a bottom. Stay tuned. Let's first take a look at the weekly price chart and see what the bigger picture looks like. Here we see the S&P 500 had a 270-point range for the week. From this huge range, the S&P 500 only gained approximately 36 points or 0.82% for the week. It did take out the January 24 low and printed this bullish hammer candle, but the weekly price is still one time framing down and also closed below this 10-week moving average and also this 40-week moving average. In addition to that, it also closed below this multi-year price channel. And finally, another thing is that it's putting in a lower low and a lower high. So by definition, based on these characteristics, the weekly trend is still down. Now looking at the market internal, the VIX closed above the 30 level a couple times last week. But at the end of the week, it came back into this 20-30 zone, and on Friday it closed at 27.59. The interesting thing is the put-call ratio. During last week's sell-off, it did not close above 1. Although it is about 0.75, on Friday it closed at 0.79. So the market participants are taking off some risks, but are not buying more puts than calls. And looking at the up-down volume ratio for the New York Stock Exchange, we are not seeing massive selling. Let's go and look at the intraday chart to see what I mean by that. Here on Thursday, initial sell-off during the open. The up-down volume ratio here didn't even go below -9. It was only a bit over 8-1 in favor of the down volume during the first 15 minutes of trading. Then it steadily climbed back up to the -3 range. So there was only 3-1 in favor of down volume throughout the session. Then the last 30 minutes of the trading session, the up volume was ahead of the down volume by 1.1 to 1 ratio. So if S&P 500 was putting in a bottom and there was some sort of capitulation, we would have seen the down volume get much larger and the up-down volume ratio would be much more negative. But that was not the case. Instead, the up-down volume actually got less negative. Also, the other thing to note is the put-call ratio and the advanced decline all seem to have peaked on the downside within the first 15 minutes of trading. Now back to the daily chart of the internals. We see on Friday the up-down volume ratio finished at 4.24 to 1 in favor of the up volume, and there were 2,178 more advancing stock than declining stock. And for the new high, new low on Thursday, there were 783 more stock make new 52-week low than stock make 52-week high. Looking at the contrast between Thursday and Friday, we see on Friday there was 74 stock make new 52-week low versus 806 stock make new 52-week low on Thursday. Friday was a strong update. It finished up almost 96 points or 2.24% for the S&P 500. Once again, we are not seeing any divergence between the New York Stock Exchange cumulative AD line and the S&P 500. Now let's take a look at the Nasdaq internal. On Thursday, the Nasdaq opened down 444 points and ended the day up 465 points. It had a 924-point swing on Thursday. And looking at the Nasdaq internal chart, the up-down volume was pretty much negative at the first 15 minutes, and during that period, it was only 5-1 in favor of down volume. But after the lunch hour, the up-down volume ratio turned positive with more up volume than down volume. Also, the daily advance decline, there were 3,300 more declining issue than advancing issue during the first 15 minutes. But in the last hour of trading, advancing issue overtook the declining issue and ended the day with more advancing stock than declining stock. Now back to the daily chart, we see Friday, the range was only 342 points for the Nasdaq 100, and it closed with a gain of 214 points or 1.53%. And the up-down volume ratio was 3.4 to 1 in favor of the up volume. And there were 2,131 more advancing stock than declining stock. Now for the Nasdaq 100, on Thursday, there were 1,345 stock make new 52-week low, and only 33 stock make new 52-week high. And on Friday, the number of stock make new 52-week low was only 136, with 46 stock make new 52-week high. Similarly to the New York Stock Exchange cumulative AD line, the Nasdaq cumulative AD line also did not show any divergence. Now let's take a look at the price action from the indexes and see what they are telling us. And starting off with the S&P 500, as you can see, on Thursday, the low, it brought the index down to minus 14.5% from its all-time high. And that definitely put the S&P 500 in the correction territory. Now, if I move this back up to where it closed on Friday, then we could see that the index is back above the correction territory. Now we're basically back in the pullback mode, and it only down a little bit shy of 9% from its all-time high. Regardless, whether it is in the correction territory or is in a pullback territory, right now our interest is, was this Thursday low is the bottom of this correction, and is it ready to make a run back to its all-time high? And looking at this thing here, one thing that we have to notice, it has put in a lower low and also a lower high. Until this formation, this price action or this price pattern is broken by going above this high here, so in other words, taking out and put in a higher high, then we still need to look at the S&P 500 as it is still in a downtrend. So assuming that it's going to come back down, remember we had a Fibonacci retracement on this swing here. And here is this retracement zone. We say once it broke this retracement zone, then we're essentially looking for retracement to 100%. And to break the 100%, first level we're going to keep an eye on is this 127, and that will bring it down to this 4060 area. Now also the other thing is we also could do a symmetry move to get a projected move. That would be this swing here, and if we do this on a symmetry, then essentially that will bring it down to 4069. And that is pretty much in confluence with this 127. So we're going to be keeping an eye on the 4060-ish level, 4060, 4070 level for the next potential downside support area. Now for the upside, if it to come back up, once again, we still need to see it come back into this zone, this Fibonacci retracement zone. So the first point will be getting back above the 4450. Now, in order to break this downward, price pattern, it needs to get above this high here, which is somewhere around 4595. So essentially 4600. So that's the level that we need to keep an eye on for the upside. Now remember, we had this pivot high here that we need to keep an eye on, and that is near in confluence with the 50% retracement of this Fibonacci retracement. So those are the levels to watch: 4070 and 4060 on the downside, 4545 and 4595 on the upside. And now looking at the Nasdaq 100, as you can see on Thursday, the Nasdaq 100 went into a bear market territory it was down 22% from its all-time high. Now, if I move this back up to the Friday's close, then it put it back into the correction territory. Okay, so right now we're essentially still looking at this price pattern where we see a lower low and lower high. So that would put it on a downtrend. Now, what are the downside target level? Well, once again, we're essentially using this particular swing to set up a Fibonacci retracement. And this is the retracement zone. And here's the break away from the 618. And the target is 127 on this extension from this retracement. Then the other thing is similarly what we did for the S&P 500 is this symmetry move for 100 projected move. And that would bring it down to 12,691, which is pretty much in confluence with this 127 at 12,940. So we're essentially watching this 13,000 level. That's basically what we're going to keep an eye on for the downside. Now for the upside, it has to get back above this pivot high, which would be 15,196. So it'll be somewhere around 15,200. And that is also in confluence with this 50% retracement near 15,166. So for the upside, we're essentially looking for somewhere around 15,200. And that would take out this high and put in a higher high. Then that would break this downward price movement. And for the Russell 2000, we see that the Russell 2000's in a bear market territory, and on Thursday it hit a minus 20, almost minus 23% from its all-time high back here. So right now we're essentially looking to see will it be able to get back above this 2105. Here is this lower low, lower high type of pattern that we'll be been seeing from the Russell 2000. So what we got here is a symmetry move projection that we're going to project down here, and 100% that would be somewhere around 1,718. And that's in confluence with this 1,715. Remember, this is the pivot high point back here right before the pandemic. So for the downside, we're essentially looking for 1720, somewhere around there, to 1715. And if it is able to come back up and bounce, it essentially have to take out this pivot high, which is 2105, and to get back inside of this balance area at 2134. So those are the upside level that we'll keep an eye on. And looking at the Dow Jones Transportation, the Dow Jones Transportation also, we set up a Fibonacci retracement, and we're seeing this at 141 is 13,716, which is also in confluence with this major move, this symmetry move that we put on here, and that essentially bring it down to somewhere around 13,714. Looking at the Dow Jones Industrial on Thursday, it actually dipped almost 13% below its all-time high, and that put it in a correction territory. But then on Friday, it actually came back up, and it closed only down about 7.8% from its all-time high. So that pushed it back into the pullback type of a territory. Now, in addition to that, I also have a projected move based on the symmetry move, based on this swing here. And that projects it down to somewhere around 31,965. So that's pretty close to the 32,000. So on the downside, we'd be watching 32,000. Now, for the upside, it essentially have to get back above this 35,768, this pivot high, because it is making a lower low and a lower high. So in order to break this downward pattern, it has to take out this 35,768. And here looking at the New York Stock Exchange Composite Index, on Thursday, it actually dipped slightly into the correction territory, losing 10.73% from its all-time high. So on Friday, it came back up to only losing 5.82% from its all-time high. So that's only a sort of average pullback. So once again, the New York Stock Exchange is back into this consolidation zone or this balance area. So we want to see would it be able to continue to stay up here and move back to the other side of this balance zone and get above this 16,708. Also, I did the same projected move for the New York Stock Exchange on this symmetry move, and that will bring it down to 15,533. But again, we essentially are looking at this possible move, maybe chop around here and maybe get back down to this 15,775. Major move target level is 15,533. So for the downside, we're basically looking at this level here. And for the upside, we're looking for this 16,708. Now, remember what I have said a while back when the New York Stock Exchange Composite made a new closing high. And it was the only index on that day that made a new closing high. And I said, from all the years that I've been watching the market, I have not seen the market top out with the New York Stock Exchange Index. That implies there's going to be another all-time high from one of those other major market indexes. And my suspicion will be the Dow Jones Industrial. And the reason behind that is because of the rotation from the growth to the value. So essentially, it is the flight to safety is always the end game. Looking at the 10-year yield, it really hasn't done much. Pretty much stayed within this area here between the 18 and the 20. So we're still looking for this thing to break above this 20, essentially 2%, and come up to this 2.5%. Looking at the US dollar on Thursday, it came up almost tag or target level here at 97.79. Then it pulled back, and on Friday continued its pullback. So we'll probably see a little bit more chopping action here. And if it's stay inside of this zone, then expect it to break out of this 97.79 eventually and move up to this 98.80. And for the crude oil, it actually exceeded this $100 level, and then it pulled back. So right now, it came back down and tested the 90.43 and be bouncing around here. So again, we'll be watching to see for the next break above this 95 area. Then next time, it probably will move up and stay above the 100 level. Then we'll see what the oil prices will be. Would it be going back and try to tag $150? Who knows, right? Right now, we're basically still looking for that 100, a close above 100. And we saw silver spiked up also on Thursday and then pull back and continue to pull back on Friday. So it did move about this 2470 level. And right now, we're extended to see would it be able to just chop around here and try to make another break above this 2470, or would it retrace back down to this 2272 area? Because essentially we are looking at this balance area. And if it go do a little bit of a look above and fail, then we're essentially looking at the possibility of retracing back to the other side of the value area. And looking at gold, you can see gold spiked up on Thursday as well. It moved above a target here at 1923. And it got pretty close to this 1980 level. And it pulled back. And also right now it's back inside of this area here. So we're going to see what continue to come down and possibly retest this 1846 before it try to make another push up. Or would it basically just consolidate a little bit more and then make another push about the 1923? Now let's take a look at the SPY, the ETF for the S&P 500. As you can see, I also have a symmetry move projection here. And for that 100%, that will be somewhere around 405. And the 618 is basically have been taken out, so we won't be looking at that. Remember last time we were looking at this January 24th low, and that have been taken out last Thursday. So here are some of the levels that we be watching. If it could get above this 437.70, you'll be looking for a move up to basically this 445.50 or bumping against this trend line. And if it breaks this trend line, then we'd be looking at the 450 level. Those are the upside level to look at. And if price remain inside of this area here between 437.70 and 423, look for the price to first come down to this 428.50. Okay, this is the weekly point of control from last week. And if it continue to move down, then we essentially are looking for retracement down to this 423. Then once it breaks, then we're basically looking for a sell-off to come down to possibly this 100% major move on this symmetry move. And here for the QQQ, the ETF for the Nasdaq 100, again, if the price could break above this 346, then we look for a move to come up to this 354.37 or near 355. And if it continue to move up, then look for this somewhere close to the 358. Now, if it comes back down, then we essentially are looking for this retracement down to the 332.45 level. And also, I have the symmetry move projection here on the QQQ as well. We're projecting the 100% move down to this 313.77, which is in confluence with these pivot low here. And for the IWM, the ETF for the Russell 2000, once again, I have a symmetry move here that project down to this 170. And this 170 is a pivot high way back here that we saw this pivot high here in confluence with that. So keep an eye on that level. And then if it chop around here, if it could get above this zone here, then look for this 209, this pivot high, get taken out. And if it does, then watch it to come back into the zone and look for this 212.45. So once again, if it come back down, look for these essentially 200 and 199.50, then retrace down to this 192.50. And if it break this, then look for retracement down to this 170. Now, I'm not saying these going to happen all in next week, but these are the level to keep an eye on for the coming days and the coming weeks. In summary, did the S&P 500 make a bottom for this correction? Did we see capitulation last Thursday, or was it just a short covering rally? Well, if we just focus on the first 15 minutes of trading on Thursday, then one could say there was capitulation. After that, it appeared there were a lot of short covering. Typically, capitulation is preceded by waves and wave of selling to create the spear for those that are trapped in their long position. Then as the selling gets worse, those that are trapped will just give up and exit. And that's when we see the capitulation. We did not see that as the up-down volume ratio on Thursday did not get more negative over time. Instead, it got more positive, and also the VIX did not spike up to the 40 level to indicate fear is ramping. So from the internals and the price action, I see the Thursday reversal is more of a short covering, and we will likely to see that Thursday low to get tested in the near future. Now, if you find this video to be informative, click the thumbs up to give it a like and help me promote and share this video. Thank you for watching and stay safe.